Then you take the next illustration or next question. Mr. Anvesh was awarded route permits between Hyderabad and Vijayawada, on the basis of his performance, on 1/2/2012, on 1/2/2002. He sells the same on 1/2/2012 for 8 lakhs. Of course, his contention is he is not subjected to any capital gains because it is a self-generated asset, cost cannot be ascertainable is what the SSE's contention. But you know the law, that is for self-generated assets the cost of acquisition shall be taken as nil. So the entire sale proceeds of such route permits shall be treated as the capital gain. And is it a short-term capital gain or a long-term capital gain? Since the period of holding is more than 36 months, it's a long-term capital gain. Of course, for this, the other way of presentation is not to make any computation. Straight away you can write the point as an answer you can develop like this also. That is, in case of self-generated intangible assets, cost of acquisition shall be taken as nil. Consequently, entire sale proceeds shall be treated as capital gain. Of course, in this case it is a long-term capital gain because the period of holding is more than 12 months. Take the next example. Mr. Pavan became the tenant in a property, on 1/1/1979 and is paying monthly rent of rupees 1,000 and acquired the tenancy rights without paying anything. He vacated that premises and received 24 lakhs from the landlord. He vacated the premises and received 24 lakhs from the landlord. Fair market value of the tenancy rights on 1481 was a 6 lakhs, These type of questions, of course, just now you listened the provision, so clarity is there in the mind. But when we sit in the exam, definitely students are bound to make mistake. Problem itself is giving the fair market value of the tenancy rights as on 1481 as 6 lakhs. So they will be tempted to write that in respect of the assets which are acquired prior to 1481, the cost shall be the actual cost or the fair market value, whichever is higher. So we adopt 6 lakhs as the cost of acquisition, but wrong. Already you have studied, in case of self-generated assets acquired, self-generated intangible assets acquired while carrying out the business prior to at any point of time, the cost shall be taken as nil, whether they are acquired prior to 1481 or after 1481. So that is the one point, whether the student is having clarity or not, the paper setter is giving such questions. So at the final level, this is what is most important, right? And please do remember, let us suppose if any landlord makes the payment of compensation like this or pay like this and ask the tenant to vacate, whatever the cost that he has paid, that can be well taken as his cost of improvement. In the hands of the landlord, what he has paid amounts to cost of improvement. As far as the taxation aspect of that particular situation in the hands of the recipient, that is the tenant, the entire amount shall be treated as the capital gain is the point. So write down these two important points. We are not bothered much about the computation part, you can do. That is, in respect of self-generated intangible assets, whether acquired prior to 1481 or after 1481, without paying anything, cost of acquisition shall be taken as nil. Accordingly, entire sale proceeds would be treated as capital gain. Of course, depending upon the period of holding, we will decide whether it is a long-term capital gain or short-term capital gain. And noteworthy point is, like, write down, for the landlord, amount paid to the tenant, to vacate the premises is treated as cost of improvement. Then take another question. Please make note of the next question. Mr. Ravinder Reddy developed a patent on 1/1/1979, and the fair market value as on 1481 is rupees 3,50,000, is rupees 3,50,000, and he sold the patent for rupees 12 lakhs, on 31/3/2012, and claims that capital gains are exempted, Of course, I am not asking you to make a note of or take a detailed solution. We will discuss on this. As far as the patents are concerned, they are intangible assets. And this is not something which he purchased. It is a self-generated one. Once it is a self-generated one, irrespective of the fact whether it is acquired prior to 1481 or after 1481, the cost should be taken as a nil, and the principle of cost or market value, whichever is higher, is not applicable. Accordingly, the entire sale proceeds are to be treated as a long-term capital, again because the period of holding is more than 36 months, right? Because beloved student here sitting is still not accepting to my point of 36 months or more than 36 months. So madam, we will continue with using the word called as more than 36 months, right? So take this point, again and again writing will help you to remember forever. But at the final level, we also expect you to quote the section, write down, as per section 55, cost of acquisition of self-generated intangible asset shall be taken as nil, accordingly the entire sale proceeds shall be treated as long-term capital gain. Point to be noted is in respect of intangible assets, either self-generated or purchased, prior to 1481, the principle of cost or fair market value as on 1481 is not applicable. Then friends, next question you take. Mr. Raghu purchased 100 shares. Now we completed the intangible assets. Now coming to the, the shares problems. Mr. Raghu has purchased 100 shares from DLI Limited, on 1/1/2004, on 1/1/2004 at rupees 60 per share, the company announced a right issue of 1:1 in June 2008. Of the shares of paid up value of rupees 10 at a premium of rupees 30 per share, brackets you write market value as on June 2008 is equal to 100 rupees per share, Mr. Raghu subscribed to the right shares in 2008. Then Mr. Raghu sold 200 shares in December 2011 at the rate of 350 per share, Compute the capital gains of Mr. Raghu. Friends, first we shall discuss the point, then depending upon the need whether to write the solution or not, we can decide. First point is what? We got a beautiful section called as 10 clause 38. What is 10 clause 38? If an SSE is making a sale of shares listed in a recognized stock exchange and securities transaction tax is paid, then any long-term capital gain arising shall be exempted under 10 clause 38. Of course, we take an independent discussion on 10 clause 38 subsequent to this. But let us suppose those conditions are not met with. That is, the sale is not happening through recognized stock exchange. It is being sold to the known person. Securities transaction tax is not paid. Then 10 clause 38 is not applicable. Of course, this question does have some working only when you don't take the point of 10 clause 38. If 10 clause 38 is there, you will say capital gains gets exempted. Now the point here is, right shares, once the SSE subscribes for the right shares, what I need to check, is he a original shareholder or is he purchasing the right shares from somebody else? If he is purchasing the right shares from somebody else, what he has paid to that somebody else plus what he has paid to the company shall be treated as a cost. But he is a original shareholder. So what is the cost of acquisition? Whatever he has paid to the company. What he has paid to the company? Paid up plus premium. 10 plus 30 is 40. 40 per share. For each 100 shares, he is getting another 100 shares to subscribe, right to subscribe. So for these 100 shares, what is the cost of acquisition? 100 into 40 becomes 4,000. So you have to calculate for the original shares one, and for the right shares which he has sold another computation for the capital gains, because what is it? Both are long term capital assets only, but date of acquisition of or the year of acquisition of the first shares are falling in which financial year? 2003 and 4, because that date of acquisition falls in the on which date? What is the date of original shares are acquired? 1/1/2004. Which financial year it will come? 2003 and 4, for which the index is 463. Of course, you can write index of 2003 and 4 is 463, and index of 8 and 9 is 582. So with this, I think students can very well go ahead with the computation process. I am not spending too much of the time on such computation since we have discussed this. But noteworthy points you can make note, because while developing the answer, we expect you to write the related sections. Write down. It is assumed that exemption under section 10 clause 38 is not available on the pretext that conditions of 10 clause 38 are not fulfilled. Then friends, we need to compute separately. Next point you write. We need to compute separately capital gains for original shares and right shares. Due to the fact that these two are acquired in two different financial years, accordingly inflation index will differ. Then friends, take one more example. Leave some space for your working the solution. Take another example or another illustration. Mr. Deepak purchased 100 shares of caprep.org on 1/2/1998 for rupees 100 per share. On 1/1/2011 2011, on 1/1/2011, company sent him a letter offering 100 right shares at rupees 60 per share, at rupees 60 per share, while the market value is rupees 200, while the market value is rupees 200. Mr. Deepak renounced this right in favor of Sridhar for rupees 75 per share, for rupees 75 per share. In case if these shares are acquired and sold by what is the name of that other person? Second person, Sridhar. What is the tax consequence? In the hands of the Deepak, and the Sridhar. Friends, here also I am not asking you to make the calculations. Calculations anyhow you can do. Issues we can discuss. See, right to subscribe is an intangible asset. And it is a self-generated one. How you are saying that it is a self-generated one, sir? Because I am the present shareholder, I got a right to subscribe in the right shares. Right? So it's a self-generated. For self-generated assets, what is the cost of acquisition? Cost of acquisition is nil. And in case of the right shares, in case of the right to subscribe, that right to subscribe will not be given for 36 months or more. You have right as and when you want, you just come and subscribe. Like such offers will not be given. Offer will be closed below 36 months only. Na? So always right to subscribe is a short-term capital asset only. So by making sale of right to subscribe to somebody, whatever the gain that the SSE is going to get is a short-term capital gain. And cost of acquisition should need to be taken as nil. Entire sale proceeds will become, what is it? The capital gain, short-term capital gain. As far as Mr. Sridhar is concerned, who purchased the right to subscribe from Deepak and paid to the company, because he has to pay to Mr. Sridhar, Mr. Deepak as well as to the caprep.org. Both need to be combined and it should be taken as the cost of acquisition. And here also the resultant capital gain is a short-term capital gain only. Why the resultant capital gain is a short-term capital gain? Because those shares are held by Sridhar for less than 12 months. So these points you write. That is, right to subscribe for the shares, is a self-generated intangible asset, and accordingly cost of acquisition shall be taken as nil. Accordingly, cost of acquisition shall be taken as nil. And since the period of holding is less than 36 months, it is a short-term capital asset. It's a short-term capital asset. Since the period of holding is less than 36 months, For shares it is 12 months, madam. Here it is not share, madam. It is a right to subscribe the share. It's not share. It is a right to subscribe the share is not to be made equivalent with the share. Is a point. In any case, it is a short term, right? But don't get confused. Right to subscribe, for right to subscribe the share also, if it is more than 12 months, it is going to be long term, is not the point. Right to subscribe the share cannot be equated with the shares, is a point that should be noted. But in any case, the period will be not more than 45 like that. So 45 days kind of thing. So what is it? In the given context, it is a short term capital gain. So that point also is a very good point. Yes, this kind of interaction really will help you, because when we read a book, when we listen a lecture, probably we may not get the clarity unless we interact. So the point which the student here sitting in the live class is asking is, sir, right to subscribe is an intangible asset. For that, is it 12 months or 36 months? My answer is, right to subscribe the share cannot be equated with the share, and the principle of 12 months or more than 12 months is not applicable in case of the right to subscribe, because their law clearly says that the principle is only applicable for the given list of things. In that list, right to subscribe the shares is not there, is the point. Then the next issue is, in the hands of Mr. Sridhar, cost of acquisition shall be cost paid to original shareholder, cost paid to original shareholder, that is Deepak, rupees 75 per share, plus cost paid to company rupees 60 per share, put together 75 plus 60, how much it is, madam? 135. So how many number of shares? 100. How many number of shares? 100 shares. So 100 into 135 makes it to cost of acquisition will be 13,500. I think students can very well make the computation part of it. Take another example. Mr. Raghuveer purchased 100 shares of Dreams Medical EduTech, Limited, brackets DME, on 1/1/1978. for rupees 30 each. For rupees 30 each. On 1/1/1980, on 1/1/1980, DME announces, DME, Dreams Medical EduTech, announces ride shares Raghuveer acquired 100 shares, 100 ride shares at rupees 40 each. Then on 1/12/1980, DME announces a bonus issue. DME announces bonus issue. 2:1. Bonus issue 2:1. 400 bonus shares. 400 bonus shares have been allotted to Mr. Raghuveer on 1/1/1981. In the year of 1988, DME again announced the right shares. Again announced the right shares. Mr. Raghuveer acquired 400 right shares on 1/3/1988 at 60 each. Again in 1998, DME announces bonus shares at 1:1 and Raghuveer received 100 bonus shares, 1000 bonus shares. Raghuveer received 1000 bonus shares on 30/6/1998. Mr. Raghuveer sold all the shares on 1/2/2012 for rupees 800 per share. For rupees 800 per share. Compute the capital gains. Then fair market value, FMV, fair market value of the shares as on 1/4/81 is 80 per share. Of course, friends, I am not going into the computation part. I would like to only discuss the points with you. Computation you can very well do. कितने बार हुआ? How many times this acquisition program happened by Mr. Raghuveer? First time in 1979. How many shares? 100 shares with 30 each he purchased. So these are the shares which are acquired prior to 1481. There is a purchase cost for it. So cost or fair market value as on 1481. What is the fair market value, friends? 80 rupees. So 80 into 100 makes it to 8,000, and period of holding is more than 12 months. Long term capital asset, how do you index it? 8,000 divided by 100 into 785. You will find out the indexed cost of acquisition, and from the sale price of 100 into 800, you will reduce this. I think there is no problem in understanding this part of the answer. Second issue is what? उनको bonus shares मिले? No, उनको right shares मिले. So right shares he purchased when? Right shares also prior to 14/1981. कितना right shares है वो? 100 right shares. उसका भी fair market value ले सकते आप. Happy well. So OB 100 into 80 is 8,000. You should divide with 100, multiply with 785. No issues. When he got the bonus shares, friends, in the 1980, that also prior to 1481. But for bonus shares, what is the cost of acquisition, friends? Cost of acquisition is nil. But even if the bonus shares is acquired prior to 1481, you don't get the benefit of cost or the, the market value. This is the important point that should come to you in the mind while making the calculation. Whereas for the bonus shares which are acquired after 1481, the cost of acquisition is to be taken as a nil is the point. Whereas in case of the bonus shares which are acquired prior to 1481, cost or fair market value, whichever is higher is the principle which is allowed is the point. In the exam when we sit, is it allowed or not is the point. For rest of calculation there is absolutely no problem. So noteworthy point here is what? Write down. Noteworthy point is, in respect of bonus shares, acquired prior to 1481, we are allowed by the law, to adopt fair market value as on 1481, fair market value as on 1481 as the cost of acquisition, Accordingly, in the given problem, in respect of the sale of bonus shares acquired prior to 1481, cost shall be taken as how many bonus shares, madam? There are 400 bonus shares. 400 into 80 is 32,000. This is one very, very important point. Next, in respect of the bonus shares, next point, in respect of the bonus shares acquired after 1481, cost shall be taken as nil. In respect of the bonus shares acquired after 1481, cost shall be taken as a nil. So the question of indexation and all does not make any sense. So rest of the computation you have to carefully work out as a point. Take another example, or other way around, you can listen the example because we have written enough. Mr. Prakash purchased a capital asset on 1/1/1973. Keep the point in memory. 1/1/1973 for a total consideration of 10 lakhs. कितना? 10 लाख को उन्होंने परचेस करे. Mr. Prakash has incurred 1 lakh on improvement of the capital asset on 1/1/1981. That means prior to 1/4/1981. And further on 1/1/1997. That means after 1/4/81. Mr. Prakash has incurred a cost of improvement of rupees 2 lakhs on 1/1/1997. So prior to 1/4/81, 1 lakh, after 1/4/81, 2 lakhs. Again on 1/6/2011, Mr. Prakash spends 2.5 lakhs towards the cost of improvement of the capital assets. Now, Mr. Prakash sold that particular capital asset on 1/2/2012 and the sale consideration is 150 lakhs. Expenditure incurred on transfer is 50,000. Compute the capital gains. What is our point here? Totally how many costs, friends? Totally how many costs? Of course, fair market value as on 1/4/81 is also given. First he acquired the asset, then he incurred the improvement cost prior to 1/4/81. Both you can combine and compare the same with the fair market value as on 1/4/81. तो पहले कितना हुआ? 10 लाख acquisition cost, 1 lakh is a cost of improvement which he incurred prior to 1/4/81. कुल मिला के 11 lakhs, whereas a fair market value is 14 lakhs, so I take 14 lakhs as the cost of acquisition and divide the same with 100, multiply the same with 785. Then another is cost of improvement after 1/4/1981, first time in the 1997, that is 96-97 साल में उन्होंने कितना इंकर करे? 2 लाख. So indexed cost of improvement is 2 lakhs divided by the index of that particular year of improvement multiplied by the index of the year of sale, and of course you need not by heart that, in the problem they will give. So it should be divided with the 305 and multiply with the 785. And one more indexed cost of improvement is on that 2,50,000 which he spent. That in the current financial year only he has spent. So it will be divided with 785 multiplied with the 785 is the point. In the current financial year only he spent, divided with 785 multiplied with the 785. See, when solution is there like this before us, probably we may not get any doubts. But when I sit in the exam to write the exam, then possibly a thing may hit my brain. यदि कास्ट ऑफ इंप्रूवमेंट के लिए भी हम लॉन्ग टर्म और शॉर्ट टर्म देखना पड़ता क्या? नो, नॉट द पॉइंट. व्हाट इज द पॉइंट आई एम सेइंग इज, लेट अस सपोज एन एसएससी एक्वायर्ड 4 years back a capital asset, right? Say today we are living in 2011 and 12, right? Sometime in 2008 he acquired an asset. Subsequently in 2009 he made improvement, 10 he made improvement. First you will decide whether it is a long term capital asset or not. Once it is a long term capital asset, but even if the cost of improvement is incurred 1 year before also even that cost of improvement is also eligible for indexation is the point. तो एक बार कैपिटल एसेट लॉन्ग टर्म हुए तो इंप्रूवमेंट कास्ट which you incurred even within 3 years also will be eligible for the indexation. Because point here is, friends, one point that I would like to share with you is pass the direct tax paper at the earliest. No sir, we always wish to pass any subject earliest only. It is only the institute that is not allowing us to do that. But that is not the point we are discussing. ये direct taxes कैसा होता? In the first attempt if you don't clear and if you go on reading it, you get more and more knowledge and more analysis. When you sit in the exam, you will spoil the game. Probably the point which I raised may not be there in your mind. Once is a long-term capital asset, cost of improvement requires indexation, divide with the year of incurrence, multiply with the year of the sale. But I am putting a doubt in your mind that yadi within 3 years, if the cost of improvement is incurred, indexation benefit is to be given or not. Some students who are known to me very good at taxation, when it comes to the practical issues, interpretations and all, still will fail the direct tax paper. For the simple reason, with good knowledge they make over interpretation. So ये कैसा हो जाना direct tax paper, at least in the CA final level, because the moment they look at the paper, that fellow always thinks of some fishy point is there in this, let me experiment on it, right? So no tricklish issues institute will test, give the same in the paper. Try to understand. Only thing is, we are expecting you to understand the provision, that much is enough. Over interpretation is not required. Chalo, back to the point, what for we are discussing this particular question, that is we have to understand that in respect of an asset which is acquired prior to 1481, fair market value as on 1481 is to be taken and you have to index it, because naturally in an inflation environment fair market value is more than the cost plus improvement cost which you incur prior to 1481. So next issue is any subsequent cost of improvement also need to be indexed is a point, irrespective of the fact whether it is incurred and the period after the incurrence is more than 3 years or less than 3 years is a point, right? So just for that point this example. So I am not making you to write this question or the answer, because it is neither an intangible asset nor a share and security, any other asset is, for that this example is being discussed. Now one more beautiful question, you can listen just, that is Mr. Karthik applied Delhi Development Authority flat on 20th to 2003 and paid 2,50,000 as application money. So 2002 and 3 financial year में उन्होंने क्या करे, application भरे और 2,50,000 rupees pay करे. The flat was allotted to him on 4/6/2003. In which financial year it is given? 2003 and 4. So you should, while reading itself, you should see in which financial year it is falling. Then at a total cost of 25 lakhs and X pays the balance amount. Kaisa? First installment 7,50,000 on 1/1/2005, second installment 7,50,000 on 1/1/2006, and third installment 7,50,000 on 1/1/2007. And Mr. that is SSE sold that particular flat on 2/1/2012 for a price of 1 crore. compute the capital gain. Solution is before me, so I can easily tell the solution. But what is the possible problem that may come when you sit in the exam? Yes, you know pretty well this is a long-term capital asset, other than intangible, other than shares. This is not something which is acquired prior to 1481. So actual cost only you have to take. Now the point is indexation कैसे देना? जभी जभी पे कर रहे हैं वो साल से देना, नहीं तो ओरिजिनल ईयर से देना. Whether you have to give original year or when you have to give. Try to understand the point, friends. In the capital gains topic, the beauty part of it is what? When you make sale of a particular capital asset, irrespective of the fact whether you received the money or not, it will attract the capital gains in the year in which it is transferred. Right? Similarly, when you purchased an asset on credit or on installment basis, you are getting the benefit of, what is it? The indexation. The benefit of indexation right in the year in which the SSC acquired. Acquired का मतलब क्या हुआ दोस्त? Allotted in this particular case. Acquired का मतलब क्या हुआ? Allotted is the point. So you have to take the index of which year? You have to take the index of 2003 and 4. Right? So take the point, friends. That is, when an asset is acquired, when an asset is acquired on installment basis, we should take the entire cost, and find out indexed cost of acquisition without giving any due consideration to the fact that such amount is paid in different installments. What is relevant is not the year of making application. What is not relevant is not the year of making the application for allotment of the flat. It is the actual year of allotment. It is the actual year of allotment. That is the reason why here what is happening, friends? That is, we are taking the 2003 and 4 index. What is the 2003 and 4 index? 463 is this thing. Of course, I am not expecting you to write the, what is it, the solution for it. Point, as a point for you to learn, that example would be of a great use.